This is post-financial crisis. This is post-flash crash.
Think about how much you know that makes up your content.
The thing that fascinated me was how wealth affects certain people and not other people.
I know the stocks are down 20% and its software is 50 cents on the dollar, but has anything really changed?
Barclays built the first algorithmic fixed income arbitrage business. Okay, and that means in this world, it was borrowing the technology that was only for you guys, the equity, low co-location, high frequency. It was applying it to the bond market. So we had a connection into our market makers and had liquidity on the cash side, and then we had fiber dug into the CME, and we could do pair trades super fast. We could take $500 million trades, slice it up into nice little pieces, delta neutral, DV01 neutral. So one cap, one bond, 1 million bonds, 10 million futures, whatever, over huge scale, but like a stealth pilot in the night. Nobody knows that we're building up these huge positions. So we would try to make a freaking penny. We try to make a penny, but you make a penny over a billion times. We're okay. So I was in that business. Once I got in that business, my whole life changed. I was like, I could do this. Okay, I could do this.
Well, because very few people can do it. That's a certain mindset, right? I mean, that's complicated. It's that's like the spreads. It's like either it works for your brain or it doesn't.
Yeah. For me, well, for whatever reason, I was happy.
Right, I know. For me, I couldn't do that.
Okay.
I was good at this. Yeah. Right. I was good at being able to navigate millions of positions and trade open outcry and screaming out, being the loudest, most annoying guy in the house, who very rarely had a problem because everyone remembers trading with me.
Sure.
So, oh yeah, I remember.
5-star experience.
Exactly.
Yeah. So yeah, I was on that desk. We were in sort of an anomaly in the fixed income world because we traded more bonds than the bond desk because our positions were so huge. And we traded more futures than anybody on planet Earth. So all the futures guys in Chicago did. And then we started to build more complex positions. Then it wasn't just basis, cash futures, then it was flies. So cash and 2 futures legs. So we trade curves with futures and cash. Then we started trading strips. So then we had 30 leg things. Yeah, like centipedes. Yeah. So at that, I just can breathe. I can do this stuff in my sleep.
Yeah, no,
right?
yeah.
And
it's amazing you're not doing it now.
Well, it's an interesting story, right? So other banks are trying to do this. So Goldman's breathing down our neck trying to hunt people out and see if they can figure it out. Because it's just such a huge business.
Who are you doing it for? Who are you?
I'm at Barclays right now. Yeah. And so my MD one day just leaves. I'm like...
And this is post-financial.
This is post-financial crisis. This is post-flash crash. Which, by the way, I was upside down like 100 freaking sticks. Yeah. So this is post-flash crash. He disappears. Then he has a cocktail party on some rooftop, and he starts picking his favorites to go to where he's going. Okay. I have no idea where he's going at the time. But I said, listen, if I can build this for you from scratch, wherever the hell you're going, will you hire me? He goes, blank check. Okay, that sounds good, because I'm a young guy and I am not making anywhere near what I thought I was capable.
But you should have. Right.
Yeah, perhaps.
Because you were always working for somebody else.
Yeah. So I get the call, and I build a business at UBS from scratch. Yeah, which required a lot of spreadsheets.
Here in New York, right?
In Stamford, Connecticut, on the train floor, and then New York. Yeah. I begged them to build me a desk.
Right.
Because the commute was driving nuts. So yeah, I built that business, and then we were giving Barclays a hard time because we were starting to become bigger than Barclays, right where I went. And Goldman still never figured it out. They tried.
You know what? They were so busy trying to fuck everybody up.
Yeah. They brought me in.
You can no disrespect.
Yeah, Goldman brought me into the. I went into the big marble, label-less office, and I started to do. I don't know if we should. It's like, but yeah, you're sort of like having me whiteboard out how this whole thing works, and I'm like, wait a second, are you guys just trying to reverse engineer my shit? Fucking, I'm out of here. Yeah. There's no job.
Right.
And just like everything else, I saw the guys I saw the guys on NYMEX go away when they hit screens, and I saw this business get more and more digital. I said, what's going to stop the banks from turning this into a seamless piece of technology that they can hand to Millennium, that they can hand to Citadel, that they can hand to whoever, right? And that's what they started to do. The platform at Barclays was called Barks, and it started to get handed off to some of the hedge funds. And it was time for me to keep the party going.
Wow.
But it was a heck of a ride while it lasted. So yeah, those are that atmosphere is what I'm trying to bring to content.
And you do a good job, because you would not, think about how much you know, right, that makes up your content, but you still make it really kind of accessible and understandable, right, which is amazing. But you obviously, when you listen, you know the business. That was what, for me, was exciting. Because there are a lot of guys out there who talk a good talk, but they don't have your back. Sure. Right? And so they're just, they don't have a real sense of the market. Be able to talk that stuff with the background that you just described, that's power. Right? Not everybody's going to hear it that way, but sure. I do, because I.
Well, you're the guy. I care about your vote here, because if I don't have your vote, I shouldn't be doing this.
No, that's why I called you. I thought it was amazing.
Well, when I got your DM, I was like, I think this guy's confused.
Right.
Why is he reaching out to me? Should be reaching out to him. This is stupid. This is backwards. Yeah. I was like, I think he's got he's a
maybe
hacker.
it's a robot.
Yeah,
right. Nobody thinks
AI
it's really
in there.
me.
Yeah.
Exactly.
Look, man, I appreciate you having me.
Yeah,
This is fantastic.
So then, I want to explain to me that the evolution of you on social media.
Oh my gosh. Yeah. So, just like you, I experiment. So for me, it wasn't art. It was like, let me talk about building a business. Let me talk about this or that. But the thing that fascinated me was how wealth affects certain people and not other people. Because I knew guys like Fish who would eat with chips coming out of his mouth, and I knew guys who nobody liked, and they had a lot of money, but they treated everyone like crap, and they were jerks. And the doors were always closed for them, and for them to open it, they had to pay. And I felt, throughout the course of my life, I had a lot of benches who were the good guys.
Those mentors, that's huge.
Mentors. Yeah. So I made a skit, started to make skits on TikTok in my free time in Chicago about rich versus really rich people.
Right.
And the really rich guy is the guy that's friendly to everybody. He knows everybody by name.
Right.
Successful guy, but it's how he treats people that's why he's wealthy. And the rich guy is a prick and, shortchanges everybody. He's mean to the waiter. And
I like that. There is that. You're totally identifying a breed of people.
Yeah.
Right? Yeah, you're absolutely right.
And I thought, how funny would it be to make videos about two rich people? It's not rich versus poor.
Right.
It's
No,
they're both rich.
Exactly.
So
but they
how
do it
hilarious.
differently.
They do it differently. Yeah. And so that became kind of like
nice guy, rich, and asshole.
Yeah, sort of. And what it ended up accidentally doing is giving people this idea that maybe you could live this way no matter what, whether you're rich or not.
Right.
And this just better stuff will start to happen to you if you treat people with kindness and you're humble or whatever. So the content series went crazy, and that's how I started on TikTok. I got 2.3 million on TikTok. And then at some point I just said, what would happen if I were to just throw in some finance stuff once in a while?
Oh, so it wasn't. So the skits were not finance.
Skits were financing in a very loose sense.
Oh, really?
I talked about business. I talked around business.
Show me. Pull one of them up. Let me see where you are.
Well, we got to go back in time. Yeah.
Keep going.
It's so awesome that you haven't seen these, Peter, because
No, I haven't.
because this is.
Yeah, let's go to TikTok. How do you get in? How to get back in? How to go back?
Yeah. Let me navigate here. Right. So this whole thing started with humor and lightness on TikTok, and that's TikTok. That's what they like.
That's I did the same.
Yeah. So we got to go way back in time here, way back in time. But dude, these skits, I think I've done 1 billion impressions.
Yeah. Were you able to monetize it?
Crazy. Well,
back then? I mean, on TikTok? No.
Depends on the scale we're talking.
Right.
Back then it was okay, but
Right.
now it's totally different. Totally different story.
Are you still doing stuff on TikTok?
I still publish the financial stuff, and now people are starting to watch that on TikTok. Okay, but it's good. It's lesser than the, lesser than the.
Because they
other
now
channels.
have a new platform where you can monetize more stuff on TikTok.
Yeah.
I went out to South by Southwest. I've not done it. I mean, no, it's not great. Okay, so my inroad into TikTok was a guy came up to me in 2020 and he said, he met me outside. His name was Adam Faze. You know who Adam Faze is?
Yeah.
He's like a disruptor kind of a guy.
Okay.
Anyway, he said, I want to.
We're back. Look,
Okay, let me see.
4.1 million views. Come on.
Spectacular. Go, show it to me.
Hold on. Now I got to pick some funny one. This is how they buy a new car.
Yeah, I want a green GP3 with the wing on the back. Hi, I'm a human being. My name's Sammy. Go make yourself useful, Sammy, and go get your boss. Big Money just walked in the door. Big Money usually wears larger than a size 7 shoe. These are 8.5s, and I've got $60K for the deposit. Scoot your little buns over to the deal desk. Listen, you seem like a nice guy, more or less, but it's not about the money. The GP3s are reserved for our oldest clients. Reserved for Mr. Beast to give away to some loser after a scavenger hunt. What? Never mind. What about that gray one? That's another customer's car. Anyway, I can sell you Macran. It's a small SUV. Probably more in your price range. You son of a bitch. Look who it is. 100,000 mile crown. Wait until you see your new car. It still has the plastic wrap on it. You're a gentleman and a scholar, Sammy. I got your back. By the way, there's a guy in a champagne colored 5 Series in the back. Looks like he's crying while eating a chopped salad. I'll call security immediately. Yeah, I want a green
So
GP.
they're back and
It's
forth. I
just
love
these
that.
characters
That's
that
spectacular.
Yeah.
So you did that for a while?
I did that for a while, and that's what got me sort of broke through the noise.
These were just interviews you were doing?
Just interviews and stuff. But yeah, I'm like, I used the rock model. I had to wrestle first, and then I could do the movies.
Yeah. But it's fair. My thing on so this guy comes up to me and goes, I want to shoot you every day for 30 days, walking out of the stock exchange, just doing what you do.
Okay.
Right? But I had never done it with like the public, right? I've always done it in sort of the top lines of the exchange.
Sure.
So he goes, well, I'll meet you right outside the white tent, and we'll walk up and down Wall Street,
Right.
Broad Street, and you'll interact with the public, and let's see what happens.
Okay.
And then we'll call it Einstein's Elementary, and you'll give everyone, all these. You'll give TikTok a breakdown on what is a stock, just super basic stuff.
Sure.
And so we did it, and it went viral. It was like we were getting millions as well. It was sort of fun. We had a marching band following me, and then I was giving away those bronze bulls out to tourists, and I was doing my spiel about the S&P 500, and it was wild. I mean, it was a totally different. A different demand, but a different audience, right? And it's like, it was very engaging. It was right, and it had its run. And then I kind of that guy sort of fucked me over and disappeared.
Okay.
And he turned out to be the guy who introduced me to this iShow speed guy.
Okay.
So he came back after 5 years of screwing me over and decided he would make amends by introducing me to the big guy.
Okay.
So I kind of accepted his apology. But anyway, so let's talk about the friggin' market. Now we're done with all of that. Yeah, I know. Okay, so let's talk here. So it's Wednesday, April 29th. How we got here, no friggin' idea. January 2026. Go back to 2026. Closing out 2025, great year, market's up 20% and change. Jensen Wang started talking about, the only sort of catalyst or impediments to the whole data center AI thing is going to be energy, right? He made that comment in December. And then in November, we had that crazy thing where Palantir had been up 7 days in a row in anticipation of the earnings. Earnings came out, they were stellar, and it sold off 8%. And the interpretation by mainstream media was, oh, that's screwed up. How could it do that? AI must be a bubble. You remember that whole thing that came out, that AI is suddenly from being the flavor of the moment, the number one, NVIDIA, Palantir, that was what was moving the market for 3 years. Suddenly one earnings report and one market selling off 8%, they've decided, suddenly it's all BS. Right? And that put a total tainted twist on the whole market because they ran with that story for a while. And I'm going like, what are you talking about? And if you remember, the Federal Reserve went from a 25% chance of a cut to an 85% chance of a cut, and then all that back and forth stuff that happened in November. So we close out 2025, 2026 comes in. What's your interpretation of the market?
The biggest change was the structure of the market. The market was a lot broader. 2025 was a narrow market. Then the beginning of 2026 was the average stock was participating. It wasn't just the Mag 7, right?
Gotcha.
So 2025 was a Mag 7 market. Everyone made money.
Yep.
All my clients are happy. Everyone's good, right? 2026, the market started to broaden. We said, oh, okay, more than just the Mag 7 are going to participate in the fun, of this economy. We're going to give everybody a chance. So the market started to broaden. The way I like to look at that is I use RSP, which is an equal weight S&P, versus SPY. So I can see the market broadening or narrowing depending on that ratio.
RSP?
RSP. It's an ETF.
It's an ETF.
It's an ETF that floats that I use as a barometer for how wide or how narrow the market is.
I like that. Okay.
So
how many stocks are in the RSP?
It's 500, but it's equal weighted, not cap weighted.
Okay. Oh wow. Okay,
so,
that's powerful.
So in your Bloomberg, right? You just do RSP divided by SPY. You got that spread.
Okay.
If it goes up, the market's broader. If it goes down, the market's narrow. Right. So I keep that on my desk every day because the market structure, it's just flavors.
Is it tradable?
It's tradable.
Wow.
Oh yeah,
Okay.
it's tradable. Yeah, it just flavors what we're doing.
Right.
And for me, if you manage money, it's.
Are you managing money?
I do. Yeah,
Oh,
I do manage
that.
money.
Okay,
Yeah,
cool.
Yeah. So it flavors how I build out a portfolio.
Right.
So right now, okay, we've gone through 2025 is a narrow market. You hold the Mag 7, you're a rock star.
You're right. You're up
You hold
20+%.
NVIDIA, you're rich.
Right.
You're driving a Porsche, everything's good.
Okay.
Then the market starts to narrow into 2026. So I start shifting. And then something even weirder starts happening, and that's crude oil. Every rally in crude oil, Ukraine, Russia, it doesn't matter. No one cares.
Yep.
Sell. And then one day, it just stopped. And we had a huge build, 3 million blue barrels built. It should break crude. Crude should be $20.
Right.
And crude didn't move.
Right.
So I go, what the heck is going on in energy, right? I own gold at this point because gold is creeping up.
Right.
Energy doesn't.
Even though it should have been trading actually down because it was following old normal ways. It's your inverse hedge, right? Like the safety, and it shouldn't have been. The fact was that the market was going up and gold was going up and oil was going up made no sense.
What's going on?
Right. That's never. And I think you even did a video about that. You would say like this is not normal.
Sure.
That everything's going up together. These are things that are normally inversely related, but they're not.
Yes.
And when was the last time that happened? Type of a thing. I think
Yeah. So for me, it's price because there is no news on this yet. This is for guys like you and I who are like, well, that's weird. I'm going to pay attention to that. Put a post-it note on it. So I'm watching energy. Energy now is strong. So now I'm buying energy. I said, look, I'm underweight energy because S&P is notoriously underweight energy.
Right.
So now I've got an energy tilt. I own some gold just as a diversifier. Now all of a sudden that starts to be a big piece of alpha in my portfolio. And then the market's broadening. And then all of a sudden, there's a war. Right? And everything just completely reverses.
Yeah, completely.
Okay?
Yeah.
So gold isn't a hedge. Gold is tied to equity beta. Gold starts to flush. Crude oil, we're still in it. It's in and over,
We're still in it.
Still in it.
Far from that.
In stocks, this is the strangest thing. The market just once we knew there was a resolution point where we could put it on the price, we could mark the day where the resolution or their ceasefire, right?
Yeah, that was the first one.
Yes. The market immediately started to narrow again. So now it's the Mag 7. It's not the Mag 7, but it's semiconductors driving this whole town right now.
Right,
So,
but before that, you had that huge sell-off where software was trading at 50 cents on the dollar.
Software
What was your
flushes out.
explanation of that?
That was that was AI driven, also just beta driven, and equality. You're like, okay, if I'm going into a war, I want to own something that AI can't replace, that's durable, and that like I can hang on to for another 10 years.
Right.
And so you're dumping
not it
software.
then? Right, okay.
You'd rather just own something more durable.
Right.
And so the way that we positioned was semiconductors were interesting to us from the bottlenecks perspective. It's like an overused word now.
Right.
But basically, the companies that NVIDIA can't live without, those are the companies I want to own, right? So we tilted a little bit towards the
inner
bottlenecks.
components of the AI model.
Yeah, Micron, TSM, right?
Right.
So those tickers got destroyed during the war.
Yeah.
So I look like an asshole because those tickers are destroyed. But guess what? They were the leadership on the way out, and they're the rock stars right now. Still.
Yeah. And when it turned, you couldn't even. It was like, so think back to February, March, April of last year, right? So February 19th, Trump says, okay, Mexico, Canada, 25% tariffs. He started that spin-off, that fall, right, of 20.8% over an 11-week period, right, from February 19th until Independence Day or whatever the fuck that was, and then when he was done, it was like nothing to see here. Let's buy the market. We're back to even within 4 weeks. And the rest of the year, the big players were playing catch up because it was retail. So one of the things I do is I like to track retail. Retail investors. So think about it. Retail. There was no retail, in my opinion, before COVID, right? That was when retail suddenly came to be. That's the naissance of retail. Is the new retail, you would say. Like everybody who was sitting at home with a little stimulus check, and all eyes are on Roaring Kitty and the meme phenomenon, who'd never traded the market before, right? And they opened an account at Robinhood and Webull, and then they were watching Wall Street Bets, and they were watching Reddit, right? That's the new normal, right? Those people came in. They thought it was about gas, right? They thought it was, and everything's going to the moon, and then they all blew up. Right, they came, they made a bunch of money. Some of them, everybody thought, 90% of them just exploded. Right, and many of them never came back to play again. They got their ass burnt, and they never wanted to play the man me over and blah blah blah. A new generation of those people came back in 24, 25, and retail became smart money. So last February, March, and April, when the market sold off 20.8%. It was you would have thought, oh, it's those new retail guys who have never seen this movie before. They are selling their stocks because they see, Trump and tariffs, and it looks like the end of the world type thing. It turned out it was not. They were buying the dip once again, and it was institutional money that was selling. Exactly. They were selling in February, March, and April, and that they when the market turned, that's why we just had the rally we just had, in my opinion. Because last year, when the market turned, they were playing catch-up for the rest of the year. They were underinvested for the whole rest of the year. They were never able to get ahead of the game. Once the market, it was 4 weeks, and everybody was buying everything, and no one believed it. Every day, remember, we'd come in and we're up 1,000. We're up another 1,000. There was no time to buy.
You're waiting for the pullback that never happened.
And they did that all year long.
Yeah.
So this year, I think what happened a few weeks ago, as you and I just mentioned, the market was eroded like 9, 10, 11%, right? Tech was getting eviscerated, software was getting eviscerated, and then suddenly last Friday we're back at 7,000. I'm the guy who makes the hats, right? The Dow 50,000 and the S&P hat. So that's always a big thing I do. And so I had, we touched S&P 7,000. I don't know, 13 weeks ago, and we hit 50,000 on the Dow, and then, but it was just a blip. Right, and we never got back there for a while, and then suddenly we're like at 7,000 again. I didn't even know when that really happened. I mean, I'm here every day trading. It's not like it happened without me noticing it. But it was like, when did that? Like we're been in the shithole. Excuse my language, and now suddenly we're back to even, and everybody is participating in this market. It's like kind of nutty.
The velocity, I think someone tracked it. It was the 5th fastest rip back.
Oversold, overbought in
history. Yeah. And I mean, I'm looking at it like the way you are, like, hey, the rhetoric out of the White House, this is an ugly situation we're finding ourselves in. We're all running the numbers about Hormuz. Now we're all Middle East oil experts, right? We're like, well, the 20% choke here is going to, and we're still in it, but stocks are going to front run it. Now we're back to loving the AI story, and if you own the hardware, you're even happier. That's the new leadership, right?
Again, right. It's funny. So, you know who Dan Alex is?
Yeah, of course.
So Dan and I have a show called Einstein and Alex. It's a YouTube channel. And we do an interview usually 3-4 times a month. He comes on because he does a lot of CNBC. And so he's always sort of my bellwether of like, okay, how bad is it going to get? What does it look like from here? And has anything changed? Because, 2 weeks of the year he's traveling through Europe, checking the, so he works for Redbush, and so he's out there also finding out what's really going on in the nooks and crannies of the market. And I'll just say, so is the demand there? Are these data centers going to be real? What's going to be fueling them? Is it still $12 trillion in capex that's going to be spent? right, is all of this, has the story changed at all, right? I know the stocks are down 20%, and and the software is 50 cents on the dollar,
right?
But has anything really changed? It's like baby being thrown out with the bathwater. And he would say time and time again. He even said it yesterday. We did an interview. He said nothing changed. At no point did that story change. And so he goes, maybe the deadline on the data center got kicked down the road a little bit, or whatever, but the demand is still there, right? And what's leading the market is, first of all, software, because that was way oversold, short term, way oversold. So they started to buy that. That was the first thing they sold, the first thing they bought.
Yeah.
Right. And then AI is now back in favor again, because they got thrown out. That people are still hurting from that AI story back in November,
sure,
when suddenly they were told that the best looking girl in school is actually a robot, right?
Right.
And it's not true.
Right.
That it's all smoke and mirrors,
right,
and that it's a bubble. Like, how do you do that? How do you tell a market that's become wealthy and hung its hat on Mag 7 that suddenly it's not true? It's all a lie, right? And it was amazing how long they played that story. They ran with that story for a long time. So now we're sitting here, and what do you think? Where do we go from here?
I just want to own. I want to own leadership. So if the market is narrowing, I'm hanging. I'm here. I'm going back.
See, I did not know you managed money. So how did that happen? When was that?
That happened 2 years ago.
Okay.
Yeah,
so
2 years ago.
An official financial advisor.
Yes.
Okay.
Yeah. So that's why I have a disclaimer on everywhere.
Yeah, right.
My Instagram. But yeah, finding myself on the retail side and managing retail money was a huge shift from what I was doing, obviously, before.
Yeah.
But look, the social media channels, it's kind of a natural fit. There's a lot of people that want to get up.
So how much money is under management?
Me? It's tiny. 20 million.
Oh, okay.
Yeah, 20 million. We've got about 500
Is it all in one thing? It's in all in one portfolio, or are you managing individual?
I have individual strategies that I do. But yeah, we set up the individual accounts to then be a sub-advisor. So we have 500 million queued to be a sub-advisor. So that's where I'm really going. My individual portfolios is like, I just want to build out the ecosystem so I can do this. So I can manage blocks of capital from other advisors. Okay. So most RIAs don't want to manage the money. They want to manage the relationship. I don't want to manage the relationship. I just want to manage the money. Right. So I'll charge you 50.
This is the old broker.
The broker's back, baby.
Yeah, back.
Yeah.
Right. That's it.
I'll charge you 35 to 50 bips. You just focus on the relationship. I'll manage the money intelligently, right? So that's tomorrow's sort of launch. Yeah. So we'll see how it goes. But we have a lot of interest there. I've stopped taking on individual portfolios. Yeah. So
are you like trading for other hedge funds type stuff, or giving you are you fund to fund type of a
just other RIAs. So I'm taking, like, for instance, if Jones and Jones down the street manages 350 million of family capital here in downtown Manhattan, and they're more relationship driven. They're not, they were never institutional finance guys. They're not portfolio managers. They focus on financial planning and those kind of elements. The boring shit. The stuff I don't want to do. You don't want to do it either. Well, guess what? They don't want to do what we do. They want nothing.
No, it's too stressful. Yeah,
too stressful.
Right.
They want us to stay awake at night. Yeah,
exactly.
Yeah. They want to make the golf tee time, right? So those guys, it's just specialization, right? They're great at what they do, but they're not portfolio managers. So that's where we step in, and we think there's a need in the marketplace there. But yeah, we manage blocks of individual retail portfolios. They just add up to a big number.
And what do you call a retail?
A retail investor? Just a family. Yeah, just a family. 2 millionaires, 3 millionaires, 5 millionaires. But you add up the whole book from one of these medium-sized shops. It's 3 to 500 million.
Right.
And so you start with a $50 to $100 million slug. We show that we can structure this the right way.
Right.
Yeah, we could just scale that out. And then I'm hiring traders instead of relationship managers. See how it goes.
Is this a new thing?
This is not even a public thing. This is like like we flipped the website over a month ago to go from retail to just talking to other RAs and other founders of these firms.
Right.
Yeah.
That's interesting.
You want in?
Oh my
Come
God.
on. You sound busy though.
Yeah, I'm a little busy.
You seem a little busy.
I'm a little busy. So before you did all this, were you able to monetize your social media?
If we just talk about scale, like the social monetization I was doing before the finance side was not meaningful money, hundreds of thousands.
Right.
Now it's millions. So now we're into
Still monetizing social media.
we're in the million range.
Oh, awesome.
Yeah.
And how are you doing that?
Newsletter.
Right.
The newsletter is a freemium model, so we have a free and then we have a paid.
Right.
So that's a huge asset. And then the asset management arm will throw off that range.
Yes.
Yeah.
Oh, okay. But it's,
Yeah,
you're
so
not making social media brand. You're making money off of that.
I did brand deals back in the day, but now they're competitive with my own products,
Right. Yeah,
so
right.
I can't do it
Right.
anymore.
Exactly.
But yeah, I worked with Public.com, with Public.com, the VC and PE guys. Who else? You said Robin. I didn't work with Robin. I did something for Webull, I think, back in the day.
Right.
So I just monetize it. It's slower, but it has more scale on
Right.
on the outside. So that's how we're kind of
Oh,
building it.
that's it.
Yeah.
Now you're doing what you really want to do.
Now I'm doing what I really want to do. And it almost killed me, but I'm here. So we're good.
Amazing. You know what? Look, I mean, you look at the stuff, the stories are.
Who don't you know, by the way? Because I mentioned a few names. You're like, oh yeah, you want everything to come down? Let's go. You know everybody.
I think I know
Who
everybody.
knows everybody? Look, we got Bill Ackman down there in the corner.
Oh my God! So he's being interviewed. So there's a lot of media stuff around the floor. So we have CNBC, we've got TD Ameritrade, Charlie Schwab TV, we've got the LA Times, we've got Internal Stock Exchange, plus a thing called the Cube.
Okay.
The Cube is a guy. It's called Silicon Angle. He's he is a tech guy from San Francisco. He's a bit of a media mogul who's been on the cap table of a lot of the great startups, and so he just bought a.
That's an expensive piece of real estate right there.
It is, yeah. He put a lot of money into it, and then you've got TheStreet.com, and then you've got me up on the balcony. So, and then the stock exchange just built a podcast studio in the old vault downstairs where they used to keep the bonds and the gold back in the day.
That's awesome.
And so they've sort of given me some of the keys to that.
Okay.
So I've done a couple interviews. I interviewed James DeMullen, the guy who interviews the billionaires.
Okay, yeah.
School of Hard Knocks.
Yes,
you know that
yes,
guy?
yes.
Right. So I interviewed him there last week. I did an interview with a young kid who had cerebral palsy. Fun story, actually. His name is Drew Davis. He was born with cerebral palsy, weighed like 300-400 pounds. He was inspired by me. Actually, he saw a video when he was 12 years old that I did. And so they got intrigued about the stock market. And then he had seen a video that I had as a hot sauce company. So he came up with this idea that he was going to start a hot sauce company. And so he pitched, I guess, a project in high school. Right? He weighed 300 pounds. He was not healthy. He was just not happy. And he'd been in the wheelchair his whole life. So, I mean, all legit.
Yeah.
And so the teacher said, don't even think about it. You're never going to. The teacher was really mean. You're not going to amount to much. This hot sauce idea is not a good deal. And so he just had this sort of spiritual awakening moment. And he said, screw all of you. And he lost 150 pounds and he started a hot sauce company. They're making 7 figures a year now. It's a great story. So I interviewed him and he started a foundation called Limitless, where he's giving money away to young entrepreneurs who have physical disabilities, like cerebral palsy. So he and I did have a hot sauce company back in the day.
Yeah.
And so he and I we're going to be launching.
How hot was it?
It was so.
On a scale from 1 to 10.
You know what? It wasn't the kind. I'm a chef. So
Okay.
I loved spicy, but I don't like to. There's no.
You don't want to get blown
burning
out.
No. So I would deseed the peppers, and it was made with 3 or 4 different kinds of hot peppers.
Okay.
And it was more like a slather. It was like more like something you add onto other things, like you put it over
Not just
chicken
one
cutlet
drop and
salad.
you're in the hospital.
No, not Dave's insanity bullshit. There's no point in that. But anyway, so he and I are launching. We're doing a drop of 10,000 bottles of his sauce and my sauce, and then we're going to give money to charity.
That's awesome.
Yeah, it's sort of fun.
Sauce collab.
Sauce collab.
That's
What do you
awesome.
think?
We're 2 seconds. I don't know. get
Yeah, go ahead.
They don't get out of your hair and let you.
Yeah, it's okay. It's
Your
okay.
wife
We'll
see
see
where
we
the
can do this
fucking
again. So
person
where do you live? New Jersey.
I'm in Chicago.
Oh, you are? Oh, I didn't know that.
Chicago.
Oh, you came all the way here for me. Awesome.
Oh yeah. It's a piece of cake. 2 hours. Saw my dad last night. It was great.
Oh, awesome.
Yeah. It's
Oh, he lives here?
He's still here.
And so what does he do?
He's in travel. He's not in this world at all.
What
travel? Corporate travel.
And he's done that forever?
He's done it forever. He
Sounds
plans
very
like
good.
huge rewards programs for like
For companies.
Japanese
Retreats.
companies. Yeah. He's been doing that forever. So I got to see some cool shit.
Yeah, I'm sure.
You know, he knows every hotel in the entire floor.
right.
But yeah,
And they know him.
they know him. Yeah. So we can get in places.
Yeah, right.
We had a good meal last night. It's good to be back.
Where'd you go?
We went to Barclays in West Village.
Okay.
Got a little roast chicken.
Yeah.
That was good.
Yeah.
It was good. Slept for 2 hours, and here I am. 3 hours. Here I am. I will come back anytime.
It's amazing. Yeah, no, we can do that. Look, I think it'd be fun to do like, I collab once or twice a month.
100%.
It'd be fun just to kind of get a good, on a good tack, because it's a different perspective.
Yeah.
Right? Your perspective of what's going on in the market is it's exciting. Right? I think, right? You're coming at it from a different perspective. Also, because of the fact that I am restricted in my ability. So I call myself a forensic pro. I try and analyze why the market does what it does. Right? I can't be perceived to be recommending a stock, or even say anything, just because I'm still a registered broker on the floor.
Yeah.
So I can, even if the regulators are watching me, anything I say. So it doesn't restrict me much, because I've been doing this forever. I don't recommend things. Right. So, but I will tell you why the market did what it did today, and give you some historic background to it, and then just give you, like I've seen this movie before. And this is what can happen. Or even like breaking down economic data, or we're trying to understand the Federal Reserve meeting or stuff like that. That's fun stuff. Like you do that as well. Also, to just have a keen edge eye on what happens when the Fed does this, that, or that. We have actually a meeting today, right? Yeah. So let's talk.
We got
about
a couple minutes.
Right. So what do we think is going to happen here? We only have one more. This could be. This is the last meeting before the last meeting. Right, hurrah!
Show.
Right, last hurrah!
So we better soak it up. And all I'm looking for is the press conference and the Q&A.
Right, which is all we always look at, because the number's the number, right? But we know that what everyone hangs their hat on is every word coming out of his mouth from 2:30 on.
Yes.
And that's what moves markets. Yes.
So today's could be a freak show, because crude is printing, I don't know, because I can't see the board, but crude's probably printing 103 right now. I don't know. We got an ETF proxy. Come on, we got something over there.
Right? The 117.
$6.
That's
No way.
Yeah.
No way.
Yeah. Look, BRMT. Look under Russell. See the right? RUT.
So okay.
Right?
So Brent
at 117 at 6.
Holy shit. Okay. So well, we were up 3% before we got in crude in WTI.
Okay.
So if Powell frames this as transitory, or is this structural?
The conflict.
The conflict and what it's doing to crude oil.
Right.
Yeah. Because he can kind of shake out of it a little bit, because he can say, well, it's actually, the tariffs are sort of part of the reason we're seeing inflation. It's not really the crude oil shock. And if he wiggles out, that's one way.
Wow, okay.
Or if he says, listen,
because I haven't even thought of tariffs. I think about that. There's still a factor.
Tariffs actually are the factor. So if you cut this apart, the energy shock hasn't really been the dominant factor of inflation. It's been freaking tariffs.
Yeah. I haven't even thought of that. It hasn't even been my wheelhouse at all.
Yeah.
I've been all hell bent on. I heard a line. It was probably Ben Ives that said that for every $10 rise in the price of oil, it's equivalent to 1% GDP.
Yeah, that's probably right. Yeah.
So we went from $65 a barrel before the war on that Sunday when they went in and attacked, to 119.20, and then back to 95, and then up to 115, and we've been back and forth between 90 and 110, but we have been consistently up above $100 and $105, right? Meaning that we went from a 3.5-4% fairly okay economy, obviously tariffs being one of the most preeminent movers of the market, to a flat or no growth economy based on this thing. So the longer the economic implications of higher oil for longer, right? And then interest rates higher for longer because we're not getting a cut anytime soon. Although Dan sort of thought that he would announce we may get one before the end of the year. Or,
December maybe.
yeah, I know.
December
I kind of
price.
thought we should have cut it the last time. The way things were setting up with the uncertainty around the war, for me, it felt like he should have done a pivot. Right? He's always sort of playing a little catch up as well.
Yeah.
I kind of think he could have been. I'm a big fan of him. I mean, think about it. He's navigated us through the last 6 years.
Yes, he's kept a cool head.
Yeah, I think S&P's up 145% since COVID.
Yeah.
Think about it as a whole. We could have a whole nother story about this. Think about every possible thing has been thrown at this market in the last 3 months, 6 months, a year, and 5 years. Right? How crazy is that? Yet, right? A couple of wars, oil at negative $25, $125, right? And
Oil went negative once.
Yeah. Oil
Don't
went
forget
negative,
it.
right? So do you know who what's Dan's
Pena.
Dan Pena.
Yeah.
Okay, so I met
The
Dan,
billion-dollar man.
The billion-dollar man. So Dan Pena came down to the floor to do an interview.
Okay.
I met him. He's been on my bucket list forever because I love his break bulls.
Yeah,
no
it's great.
BS mentality.
Yeah.
So and he was, he's dressed this all in his thing with the chain and this. I loved him. So he was down doing somebody else's interview. And oh my God, I've given top of my bucket list since I was 20 years old. And he's an old Wall Street guy. He worked up at Solomon Brothers. He was
really?
Yeah, he made his first money. He made $800 billion trade on the negative oil thing, right? When oil went, he made stupid.
Slinging oil?
That's how he made his money. He's an oil magnate.
I didn't know that.
Yes, I didn't either. But that's how he made his money, going back to the CME, going back to the 80s. Wow. Right? That was how he ran oil for Solomon Brothers back in the friggin' day.
That's crazy.
I know. So anyway, I see him. I'm going, oh my God, I got to interview him. So I grab him. We sit down there and we talk old Wall Street stuff. He'd never been actually on the floor, but he used to come hang out here a lot.
Okay.
And then he invited me to come speak in his. He has an academy in Ireland in the castle.
Yeah.
Where he does his, rips everybody a new one.
Stuffing and
right.
The
It's not being a chicken tip, exactly. And so him and his wife. We sort of just fell in love with each other. He came back 3 weeks later. We went out to Gallagher's for dinner. We had a great time. It was fun, like old Wall Street dinner. But I mean, he's that guy. He's an oil guy.
I didn't know that. That's fun. Okay.
But anyway, so
all these social media guys are secretly traders behind closed doors.
Yeah, of course they are. Well, he's actually doing a little bit of social media, but you think about it, that we're up 145% since COVID. Right, and I think that was sheer genius by Powell's part, right? To think about how 2020, 2021, right? All the shit we learned from, like, I love putting everything in historic perspective, right? Like you can tell that 07, 08, right? We threw 800 billion into the stimulus package. It took 9 years to get back to EBIT. COVID, they put $3 trillion into it over 3 months. We were back to EBIT by August, right? And we've learned that lesson. We've learned that lesson that that's what you have to do. There may be pain on the other side, but you've got to nip it in the bud. You need to do what you got to do. Then that's how you get out of these jams.
Do it quick.
Rip the bend. Right? And they didn't always do that because 09 literally took 9 years to get back to even.
Yeah.
Right? After the financial crisis. That's painful. A lot of people, that shook out a lot of people. Right? I mean, if you think about that, that was pain for a lot of people for so many years. I was a kid.
That's my risk management barometer is 2008 because what you just described, right? The length of time to make back. Because it's one thing to be a trader. It's another thing if you're managing individual accounts. Someone's retirement, right? So guess what? If you can't retire for another 7 years, you've put someone's life on crack.
And we saw that even. People were considering that possibility last February, March, April. Yes, we were down 20.8%. Everybody was looking at, are we about to really, is this 20.8% the beginning of a way bigger sell-off?
Yeah.
Or is this going to be another buying opportunity? Right. It turned out to be. When we were in it, it didn't look that way. Dan and I was funny because Erin Burnett, who's on CNN, she used to work on the floor for years. She was the one who named me, the first person that named me Einstein. Okay. On February 19th, she called me and asked me would I come and speak on, come on and be on up front with Darren Burnett, on CNN. And so I showed up, and Dan was there. Dan and I had already been doing the show for a year, and I said, "You realize that she and I have a thing going?" They brought us back every night for 8 months.
Wow.
We were on from February 19th until September, every single night.
Okay.
But we got to see what was going on, and it looked. We both say he was calling it like economic Armageddon.
Well, cost
February, March,
process,
April.
and it looks horrific.
Were you managing money already
of
then? Oh
course.
my God, that must have been scary.
Of course, yeah.
Did you pivot or you just stayed back?
I reduced risk 20% in qualified accounts that weren't going to have a tax impact.
Right.
And I was very public about it. And I got so much backlash from people who say, "Oh, this dude's sold at the bottom."
Right.
There's a difference between risk
Selling
management,
yes.
okay, and being a long-term 20-year-old investor who dips are buying opportunities. But when you manage money, when you manage blocks of capital, smart risk management is what gives me a job, okay, as opposed to being out
Keeps you
there.
alive.
Keeps me alive. So, a very conservative reduction in risk, and I immediately just bought back. We just moved to short rates. So we just moved to bills, to a little bit.
It's amazing.
And we just
the expanse of your knowledge of. I mean, to
Well, what the hell else am I going to do?
No. I
You
get
didn't-
it. But
I got no choice.
Right. I see. There's so many. I know what I know. You know so much more because but that's from the management.
Yeah.
Right? I could not manage money.
Well, you're
I could trade money. I
You're
can't
deep.
manage.
I'm wide.
Yeah. Exactly.
I'm wide.
That's the difference.
Yeah.
But anyway, you know what? You got to go. Anyway,
Good.
this has been absolutely a pleasure.
Great to
talk
meet you.
around it, right? Fantastic.
Thank you
I
so
look
much.
forward to it. You know what?
See you soon.
It's the Einstein on Wall Street. My man Nicholas Crown. That's all I got to say about that. Woo! Boom!